Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Marex, Product Development Specialist with Nasdaq Index Research, to discuss the MBI, or Nasdaq Biotech Index. Mark, welcome back to Trade Talks, and this is going to be an interesting index to watch heading into the election, as a candidate should be talking about healthcare policy and, of course, any developments with COVID-19. So with that, let's take a look at the composition of the Nasdaq Biotech Index.
Totally. Yeah. I mean, talk about a relevant index for this year. With everything going on with the coronavirus, obviously super relevant from a, treatment, diagnostic, overall kind of technology meets healthcare approach to fighting the pandemic. Also super relevant for healthcare policy in the U.S., especially given, what we think is going to be a very painful Supreme Court nomination, and whether that's going to have any impact on the Affordable Care Act, possible very, very widespread impacts on drug prices and healthcare costs, at least in the U.S. So with that, let's get right into it. This first slide shows you, the breakdown of this index. Just a quick recap for folks. It's been around since the 90s, almost 30 years, modified market cap weighted index, top 5 components, capped at 8% each quarter. The rest of the constituents capped at 4% each. You can see that that split between the top 15 of the index of about 200 constituents these days is a little under 60% of the index weight. So actually quite a bit less concentrated than other indexes like the Nasdaq 100, like something like the Nasdaq Select Semiconductor. It's just a bit of a more decentralized space in terms of there are some, certainly market leaders in the space. You can see Amgen, Gilead, Vertex, Regeneron, Illumina, those kind of round out the top 5. Gilead's been in the news this year a ton, thanks to remdesivir, which kind of remains the only pure play antiviral that's been working on COVID. Very costly to produce, but has been, really helping out the recovery rates for those folks who end up in the ICUs. Super important company to watch, not just for that reason, but also because Immunomedics, which you can see down there at about number 10, was recently announced as an acquisition target for Gilead at about almost $20 billion. One of the biggest acquisitions in the space in history. So that kind of gives you the snapshot of, the top 15. Let's move on to performance.
Yeah, I was going to say, when we look at that year-to-date performance, 2 constituents certainly stand out in the pack.
Yeah, I mean, what I've highlighted there in the middle, IMU, as I said, with that acquisition from Gilead, they're up almost double what the premium was when that acquisition was announced. So certainly a market leader that will be going away probably from the index later this year, assuming that the transaction closes. Moderna is the other big one, right? It's not a top 5 name, but it's pretty close given the fact that they're working with the NIH on a vaccine candidate using, funny enough, their ticker is MRNA. They're using MRNA technology to develop this vaccine. Very kind of futuristic way of, instead of injecting a dead virus into folks and tricking the immune system into recognizing that in the future and building immunity that way. They're doing something very, very unique where they're injecting the virus's RNA strands into protein cells and then kind of teaching the body how to attack it that way. So we have high hopes for that vaccine, and obviously the market is recognizing, some pretty high hopes there as well, with the stock up over 3x so far year to date.
Mark, before we get into your next slide, you mentioned that one of the constituents could be coming out due to an acquisition. How does that work when a stock comes out of the index because of an acquisition, not because of a traditional rebalance? Does it depend on how the index is constructed, or is there a certain amount of time when you can add a new constituent in? How would that work?
Yeah, sure. So very, very good question, especially given what has developed this year. For this index, it's not limited like the Nasdaq 100, for example, to the top 100 largest non-financials. It's basically got some limits around market cap. You've got to be at least 200 million in market cap. You've got to be listed on the Nasdaq. You have to have a certain average daily trading volume to make it into the index. And yes, if you're a new company, you do need seasoning. You need about 3 calendar months, not including the month of your IPO, to gain that seasoning eligibility criteria to make it into the index. But with looking at where things stand now, this index reconstitutes annually in December, right? So rebalances quarterly, but in terms of determining whether new constituents come in, that's in December. We're seeing names like BioNTech, which is the Pfizer partner on the Pfizer vaccine, a Germany company with an ADR listed in Nasdaq, that's expected to come in December. Other potential companies that have just had banner years this year that were simply too small to make it in a year ago, you'll see them likely come in December if things hold up.
Okay, back to the charts. Thanks so much, Mark. Year to date, how has the MBI performed relative to other indexes?
So yeah, I mean, you can see here that it was actually tracking with the Nasdaq Composite pretty closely until about end of June, early July. Still doing pretty well year to date, up about 12% as of the market close yesterday. That is far outpacing the S&P 500 as well as the S&P Select Sector Healthcare Index. And the big difference between this index and something like that is in that index you've got health insurers, right, like Aetna, like United Health, like Humana. You've got your drugstores like CVS. You've got a number of different companies that are not quite as involved in the actual task of coming up with new pharmaceuticals or new, alternative forms of biotechnology. This index is much, much more of a pure play on R&D. And we do expect to see that reflected in higher volatility sometimes. Not quite sure the last few months whether it's people during the summer got a little bit complacent about the COVID risk. Maybe that's been hurting performance. We talked about the election. There's been any number of conflicting headlines from the White House talking about how they're going to try to bring drug prices down. I would look for, as COVID resurges later this year and as we get clarity around the election, for this index to start to jump back up in terms of its levels.
And finally, how can investors get exposure to the MBI through an ETF?
So there's a number of products here, both in the U.S. and internationally. We've got an ETF out of Israel from Taklit. We've got an ETF in Korea from Marex. We've got an ETF from Invesco, as well as a couple leveraged ETFs from ProShares in the U.S. The big daddy of them all is the iShares Biotech ETF, ticker IBB. Been around for quite a while, up to about $9 billion in AUM as of last check. And you can see here that that AUM trend for the overall, right, looking at all the ETFs in the space, up a solid 85% from that low in mid to late March. Last check about $13.5 billion. So that $9 billion from iShares is, pretty much about 2/3 of the total.
All right, Mark, thanks for joining us on Trade Talks.
Thank you, Jill. Great to
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.